Good morning. Steve Fried in Chicago with the morning grain comments. Well, the markets are higher overnight. Beans up about 7 cents. We've got corn now up 2 cents, and wheat's a little bit higher, getting back to $6 on the December. Usually Tuesdays and Wednesdays are usually markets that have not as much information, especially Wednesdays, about what we can trade on. Bull markets need to be fed every day, even sometimes twice a day, to keep their uptrend. But we do have some interesting numbers going on. Number one, the Chinese currency is at 30-month highs, and there's talk about China stockpiling crude and ag goods. That could mean that they will continue to support the crude oil market, and that they will continue to support the soybean and maybe the corn market. We also noted that there's a big inverse in Brazil between last half Feb soybean prices in March. It's about 50 cents, which suggests that if China's going to buy, maybe for Jan and Feb, they may need to buy from the United States. We're also looking at Argentina domestic soybean prices at 6-year highs. Farmers aren't selling as much down there, and for parts of Brazil and Argentina, dry weather is slowing some of their planting and reducing some of their outlook for production numbers to sell. The Matif rapeseed contract hit contract highs. Canola. Canada canola is also the highest level it's been in 3 years. The Asian soybean and soybean oil contracts made new contract highs. So the bottom line in the bean market is that we're still looking at the possibility of 150 million bushels more demand on the balance sheet, which would take a U.S. carryout below 100. We're testing $12 beans. We'll probably trade over that. The big question is, one analyst came out yesterday and said that if the South American weather stays dry and if China buys U.S. beans as forecasted, we even could test $15 beans, which is a lot out of a lot of people's radar right now. We also noted in the corn that Ukraine has a lower crop. Their domestic feeders are trying to get their country to limit corn exports. Europe needs corn to buy. And in Russia, their domestic feed grain prices are also at all-time highs. From a weather standpoint, it looks like parts of Russia will be seeing some improvement over the next week to 10 days with light showers. But again, we're not convinced that they've turned the corner, that their overall pattern is going to be more or at least close to normal rainfall. We also noted that the wheat is kind of a follower, and a lot of funds are short wheat and against long corn and soybean positions. But again, if Russia misses some of these rains, if U.S. plains stays dry, and if South America stays dry, wheat prices will probably fall corn higher. U.S. plains, the GFS model's got rain in the U.S. plains, but the European model is completely dry. So we'll have to figure out which one's right. But historically, the European model has a better chance than the GFS model in being accurate. We've got the funds long 250,000 beans, 84 meal, 100 oil, maybe 250 corn, and they whittled their long position in wheat down to Chicago down to 20,000 contracts. Stocks are slightly higher, the dollar is slightly lower. Crude's higher, gold's lower, and copper is higher. So again, the outside markets are trying to balance the virus increase in cases versus possible vaccine in 2021 and turning some of these demand numbers higher, and the demand for raw materials also higher. People are kind of being somewhat short in talking about inflation, but again, the vaccine provides some hope. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.